Hello everyone, and I have a special video market update for you today. It is June, let me not get ahead of myself. It's June 19, 2016, and this is a very important week in the markets because we have a fundamental, what we have is some volatility expected this week as a result of the Brexit poll. And I just wanted to do a quick video market update to see what is going on across the different markets, the Forex markets, the stock markets, and the futures markets to see what's going on and what you can expect. Okay, what I have in front of me is a chart of the British pound versus the US dollar. And the British pound, as you can see, has been trending downwards over the last couple of months. And then ever since February, we are moving somewhat sideways. Now, last week, the British pound traded down to a low for the year, essentially, near the 140 region. And what we have seen is that the market has rallied from roughly 140 to 146.66 in 3 days. Now, the reason for that is that we have some improving polls coming out of England that is basically saying that the chances of a Brexit is low, and that's why the markets have been rallying. And the British pound is definitely vulnerable to some very strong moves this week as a result of the Brexit. If we see the vote coming in to leave the EU, you could see a massive sell-off in the British pound. I mean, we could see a sharp move to the downside. And if the vote is to remain, you may have some more upward potential, but I wouldn't be banking on a huge market move to the upside because I think a lot of that may be baked in the pie. As the markets tend to prove, anything is possible, but that's what I think will be happening. Taking a look at the euro versus the dollar, we see that the euro is a chart of the euro versus the US dollar here. And the euro versus the US dollar is in largely a sideways consolidation pattern ever since roughly March of 2015. This is March 2015, and the market has really just stayed in between 115, roughly 115, 115.50, and a low of 105. And what we're seeing is that this market is ripe for a fairly large move in either direction. If we close above this 115 to 116 level, we could see a strong rally in the euro. But if we continue to move down, if the market tests the 105 level and goes below that 105 level, we could see a massive rally in the value of the US dollar. So this is definitely a currency pair to be looking at in this week in terms of the Brexit. Stock market, let me just quickly take a look at the US S&P 500, and let me look at the futures markets. After S&P 500, I'll get to gold and the Japanese yen. But just taking a look at the S&P 500, yes, we're up this morning, and that's on news that the chances of Brexit are easing, and the market is up. But notice that the market still is below this all important resistance in this 21.30, 21.17 up to 21.30 level. Let me just draw the line here. So this is resistance in the market up at this level here. And even if the Remain vote stays, the market could have some difficulty eclipsing these levels. If we do close above this 21.30 level, that'll be fairly bullish for the market, and we could see a rally. Now, moving from the stock market to the gold market, this market, I believe, has, and for anyone who has been listening, has reversed, and we have moved from a period of lower lows. Let me just compress the chart here. A period of lower lows and lower highs, lower lows, lower highs, lower lows, lower highs, to breaking this cycle of lower lows, lower highs. Market broke the cycle here, and I believe that we could be on the verge of higher highs and higher lows in the gold market. So I believe that we're essentially at the floor of what could be a promising bull market in gold. To prove this theory, we need the market to close above this 1300, this 1320 to 1350 level. If we can close above 1320, that would give me more confidence in the gold market and the up move in the gold market. But as I said, I believe we're at a crossroads here, and this could be the start of definitely bullish price action in gold. Just to look back, we had in the decade of 2000 up to 2010 or so, we had a move from roughly $200 to over $1,900 in gold, and that bull market lasted 10 full years. Now, so we could be at the start of another bull market. How long will that last? If it really gets underway, I'm not sure, but it definitely could take gold above $1,800 or even $1,900. Now, asset that has been performing well this year is the Japanese yen, and this is a chart of the USD versus the Japanese yen. For the Forex traders out here, you know that when the market is moving down, that means the Japanese yen is increasing and the US dollar is going down, because in the Forex market is paired like that, USDJPY, and this is what we call a wonderful trend. And for those of you who have attended the webinars, you know that I advocate a trend following system. It's best to identify trends and then follow the trends as they transpire. And we're definitely in a downtrend in the USD versus the Japanese yen. Again, meaning the Japanese yen is increasing and the US dollar is decreasing against Japanese yen. So this is an asset class that is performing nicely, and I expect to continue to perform over the next couple of weeks, the next couple of months, the USD versus the Japanese yen. Also, silver, I anticipate silver will continue to do well. Similar setup with gold, that the market broke of a period of lower highs, lower lows. The market broke up to the upside. And we could be in it for a period of now of higher highs and higher lows in the silver market, and it could definitely be the start of a uptrend in the silver market. So definitely the things to look out for is the euro versus the US dollar. We want to see if the market continues, if the upside is pressured, or we move to the downside and see how the market performs against the 110 and then a 105 level. Okay, so now last year around this time, we did something for traders and investors that was very beneficial. We got very good reviews for it, and I can only offer it, just like similar situation to last year, for a limited time. For traders who are stuck with their trading, for example, you may be having problems with your trading, or you may just not be profitable. You may be confused about how to do your technical analysis, how to draw Fibonacci retracements, how to identify trends. If you are confused and it's just not working out for you, I'm offering for a very limited time a free one-on-one trading class, a free one-on-one trading class with me personally. Yes, I did this last year. I cannot open it up forever because it's very time consuming, but I'm offering free one-on-one classes to you, the trader. Now, what you will learn is essentially a systematic way on this class to identify entries, to identify trends, to know when to exit the market, and how to exit the market using this trend following system. If you are interested in having this free one-on-one trading class, just let me explain a little bit more. The free class will be done via GoToMeeting, one-on-one live. So you'll be able to see my charts, as you can see here. You'll be able to see my charts, and I'll be able to see yours, and then we can draw on the charts and point out errors. You can even come with your trades that you have made. Very, very good session. The class will be about 35 to 45 minutes one-on-one with me personally. It won't be outsourced. Now, if you'd like to get this free class, what I will ask for you, because we have thousands of people listening to this video, is that I will do it for the first couple of people who leave a refundable deposit. Now, the reason why I ask for a refundable deposit of $97 is the deposit is just to book your place with the class. So when I know that you have booked your place, you have left your deposit, I know you are serious about the class, and then we can go ahead and schedule the time for us to meet. We'll be doing it over the next week to week and a half. We can schedule the time for us to meet, and we'll go over the class. At the end of the class, you will receive your deposit back. The deposit is just to hold so that I know you're a real person and you are actually serious about attending the class, because my time is valuable and my time is limited. So if you are interested in the free class, what you can do is click on the link below this video to leave your deposit. Only folks who leave the deposit will be eligible for the free class. Thank you very much for listening to this market update. I know these classes will be beneficial to you folks who actually signed up for it, just like how it was last year, because I got some great reviews and we're able to help some traders last year, and I'm sure I'm going to help a lot of you this year. So I look forward to speaking to you and seeing you on the free class. Thank you very much for listening, and I hope you have a wonderful day. Click on the link below to get the free class. Thanks.